Do not proceed.
There's a WTF.
When you get an applicant,
there's a what the fuck.
When we get an applicant, it goes DNP. Do not proceed.
Do not proceed. That one. Okay. Denied. No.
Denied.
No. Buying a home isn't just about numbers. It's about moving your life forward. Welcome to the Wright Move Podcast, where mortgages meet lifestyle. I am Kendra Wright, and with over a decade of experience and more than 900 loans funded, I've seen firsthand how the right guidance can change everything. We're here to simplify the process, build confidence, and help you make smart moves for your future, because your next move should always be the right one.
Welcome back to the Wright Move Podcast. I'm Julian, your co-host, sitting next to the host with the most, Kendra Wright, who's on a mission to bring back hope to home ownership. And today we're tackling one of the hottest topics in the market, down payment assistance. If you heard about it, you probably wonder, it's a free money? Spoiler alert, it's not. So we're breaking down the 411, what it is, how it works, and what buyers really need to understand before jumping in.
Down payment assistance can be an incredible tool, but assistance does not automatically mean free money. Some programs are deferred loans, some are second liens, some have income limits, and if you don't understand the structure, you could be making a short-term move that doesn't serve your long-term wealth goals. At the Wright Loan, we don't just get you into homes, we structure strategy. So today, we're simplifying it all and helping you decide if down payment assistance is truly the right move for you.
Down payment assistance, Kendra.
Down payment
That's
assistance.
the hot topic for today's episode.
Down payment assistance. DAP.
DNP.
DAP.
Yeah, DAP.
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 DAP. They always call it a DAP.
DAP, is that what the
That's like
acronym
an
is?
That's a lending term, a DAP.
DAP.
A DAP.
Oh,
yeah.
acronym.
You want a DAP, a down payment assistance program?
Yeah. There we go. I'm still learning some of the acronyms here in this industry.
There's so many acronyms. Everything is an acronym. I didn't know a lot of them when I first started. People would start rambling acronyms, EMD, CTC.
Is there a DNP?
A DMP?
DN.
DNP? No, I don't think so. I've never heard of a DNP. There's an MBA. There's a TBD. There's...
Do not proceed.
There's a WTF.
When you get an applicant,
there's a what the fuck.
When we get an applicant, it goes DNP. Do not proceed.
Do not proceed. That one. Okay. Denied. No.
Denied.
No. We get the what the fuck, the WTF ones. Like, yeah, what are we doing here, people?
Oh, yeah. You gotta love it sometimes.
Oh, we love it all the time here at the Wright Loan, right,
Well,
Julian?
down assistance programs.
Down payment
assistance programs.
Down payment assistance programs.
DAPs.
Down payment. All right, Julian.
Alrighty. What do we got out there? We're kind of probably so many options for when it comes to down payment assistance.
Yes. You know, when I first started in this industry, which it feels like a lifetime ago, and it's only been a full decade. It's like a long decade. It's been It's been a long decade.
So what have you seen before in the past?
So down payment assistance, when I first got into the mortgage as an originator, as a mortgage advisor, working with first-time homebuyers, a lot of them, their biggest hurdle was the down payment and the myths involved with a down payment. Like, how much do you think you need for a down payment, Julian?
Or the myth we always talk about before in episodes is, I need 20% down, which is not the reality of it.
No. And the wonderful thing is there's a lot of programs that allow for first-time home buyers and repeat buyers that you don't need 20% down. FHA, the minimum requirement is 3.5%. 3.5%.
3.5%, yeah.
3.5%.
I was going to say, 3.5%.
Yeah.
And then also, conventional, it can range.
Yeah, so if you're a first-time home buyer, the lowest down payment for conventional is 3%, so you have to never owned a home before. But if you're a repeat buyer, then 5% is the minimum.
Okay.
So again, you don't need to have 20%. That is a big misconception. Of course, 20% allows for no mortgage insurance, helps lower your overall loan amount and the payment itself. But no, you do not need 20%. And again, FHA, which is a very commonly used first-time home buyer program, allows for a minimum of 3.5%. So for most people, that's great. They can figure out how to get the 3.5%. But there are some cases where there are buyers that don't have the 3.5%, and that's when a down payment assistance program comes in.
Oh, yeah. And what about credit-wise? Do you need, does that affect anything when it comes to the programs?
Well, yes, different down payment assistance programs have different.
We're just going to say DAPs now, make it easier.
Well, I like long and drawn out. Different DAPs, different down payment assistance have different requirements, and we'll dive into that a little bit more, Julian, about the difference between a government-backed down payment assistance to one of our in-house down payment assistance programs.
All right, let's talk about the government-backed down payment assistance?
So a commonly used down payment assistance, and one that I used very often when I, again, first started in the industry to help buyers achieve the dream of home ownership, was a CalHFA loan. And CalHFA is a state-ran down payment assistance program. Okay. So this is not just limited to like, I'm not the only one that can do CalHFA, by the way. You want to think I'm the miracle worker and I can offer you down payment assistance and it's CalHFA. Just so you know, CalHFA is a state-ran program. So any lender in the state should be able to do a loan through CalHFA. The way it works with CalHFA is that you work, I would get you qualified, get the buyer qualified, and then after we qualify you, then we do send it to CalHFA because they have to review the files. So there is a little bit more involved because it is a state-ran program. They typically have a little bit stricter. They're a little bit stricter because they have higher, credit score requirements. They have there's income limits involved. So there are some, it's an assistance program because it's helping people, that might be in the middle income bracket, who might not, who might have they might have a 660 credit score, maybe not a 700, but CalHFA is a state-ran program. We send it to CalHFA. They're the ones that give the final sign-off. We follow their guidelines, okay? And then they offer a second loan or a second lien on for the assistance. So they'll give you up to a percentage, right? There's percentage ranges of assistance to meet that minimum down payment. And then there is a second lien that is attached to your home. So again, it's not free money and the payments are deferred. So when you go to sell or refinance, then you will need to pay that second lien off back to CalHFA. Yeah.
You can't lump it in together?
When you refinance or when you sell, yes, but you can't. No, when you buy, you're gonna have your first loan, which is the big loan. Say it's a $450,000 first loan, and then you have that little second loan of like say $25,000 for that. You're using that $25,000 to buy for the down payment. It's attached to the property, so you might not be making monthly payments on it, but at the end of the day, it's deferred and you will pay it back when you sell or refinance. And that was a common misconception for some buyers is they thought, oh, well, I'm not making a payment on it, so is it going to go away? No, I've talked to clients and all of a sudden they're refinancing. Like, wait a minute, I have to pay that second back? Yes, it is an assistance program.
It's free in life, unfortunately.
Well, happiness is free.
Well, it's a part of it.
I mean, come on, what we can, what's free, our choices, how we act. But no, going back to the assistance itself, no, on a CalHFA loan, there is a second lien attached to your property. It's deferred. And when you go to sell or refinance, you will pay it back. Plus, again, there's some caveats with income limits. You have to be a true first-time home buyer. I mean, there's a lot of little things.
Yeah, certain requirements that you have to check the boxes before.
Oh, yes. And then, they have a little bit stricter debt-to-income ratio limits. So, again, I did a lot of these CalHFA loans back, pre-COVID when, it was a little bit of a different market. Home values hadn't gone up and, it worked at the time. Rates were, lower. And so for most people, CalHFA was a really amazing option. I would do probably at least 1 to 2 a month back, and that was just on minimum back pre-2020.
Oh, that's awesome.
It was awesome. And it really helped. Again, these, you're a buyer, you pay maybe $3,000 a month in rent. Why not be able to actually own a home? But the down payment was a struggle. They had the credit, they had the income, they checked all the boxes to buy, but they didn't have the money. So CalHFA helped them achieve that goal. So again, it was a wonderful option if you check all the boxes.
Let's talk about the limits again. So I'm sure limits vary by counties?
Correct. Yes. So each county has its own different income limits. So we always have to check what county are you purchasing in, and making sure too, if you live in an area where counties are bordering up, you might qualify for a certain amount in one county and different in another. So you have to be very careful about that too, because you cross county lines, it makes a difference. And that's also that is also why it's important to work with a lender that is well-versed throughout the state of California, because I have done loans where there's literally within a 5-mile range, you're going from one county to the next, and that changes. Well, yeah, you qualify for CalHFA in this county, but you make too much money in the second county. So you have to be very aware of that because that can change. So who you work with matters.
Well,
right?
It does. And, and the greatest part of that, CalHFA does have information. It's hey, what I need to know those income limits, I can go online, find those limits.
CalHFA.gov. I mean, it's pretty easy. And that's just ran by that is a state-ran program. We don't we don't do anything. We follow what they require. So you can look it on there, but we can help make the process easier if you want to work with us to help bring you home with a CalHFA loan.
Is there any education involved too as well?
Yes,
Okay.
you always have to do a home buyer's education course with them. So yes, that's one of the things. And there's typically a fee involved to do that. So there are some, like I said, there's little asterisks involved that, if you're going to get an assistance program, you just be prepared. There's things that come with it.
Yeah, you got they're helping you out, which is awesome.
Yes.
But at the same time though, you can't just say, all right, we're just going to give you money and, we're all good to go from there.
Well, that's just like a loan itself. I'm
Yeah,
like,
exactly.
even if we give you a $500,000 loan, they're like, why do I need to provide you so much documentation? We are giving you you're wanting a $500,000 loan. We want to make sure you're going to pay us back, right?
And then you're also getting money to help you get that loan.
Exactly. So there's another layer involved, right? So it's like, I kind of like when people ask, like, why do I need to provide that? I kind of like, just repeat the question out loud.
Exactly.
Yeah. Like how much money are you wanting to borrow against? Like this isn't a credit card for a $2,500 limit. This is a home purchase, which is permanent. Talk about permanent, fixed to the ground that we're wanting to make sure that you can pay back.
Well, thinking about the amount, what's typically the percentage that they give you for the down payment assistance?
It's typically in your own 3.5% to 4%. So it covers the down payment. It typically covers the down payment portion of it. So that assistance will cover the down payment. Then we work with our realtor partners and you strategize getting seller credits to cover your closing costs.
Okay.
Yeah. So again, is always strategizing and structure.
The nice part is, say if I had zero down payment, this program helps me get the funds I need, work with the seller to help with the closing costs.
Yes.
So there's ways you can make it work.
It's a team effort here, guys.
Oh, it does.
And working with the right loan.
So what would be the pros and cons you would say about the CalHFA?
Well, again, the pros is that second loan is deferred, so you're not making a monthly payment on it. Okay. So, it's not added to your monthly payment. Okay, so you're only paying for the first loan.
That's great.
So that's nice. So it helps with the monthly payment. The cons are, again, income limits, based off county, debt to income ratio requirements. Then you have to be truly a first-time home buyer. So, I mean, it can be a limiting program, so you have to check the boxes. So it can be a little bit more challenging to get qualified for a CalHFA, or you're going to limit how much buying power you actually have because, again, you have to keep the debt to income limits lower and all of that kind of stuff.
Well, I know about one con that you didn't mention.
Oh, what?
It's a lottery system.
Oh, well, that's okay. Let's correction.
That's a bit, yeah. It's not for everybody. It's not something where we're going to give this.
That's for the dream. That's for the dream.
Oh.
Okay, so the Dream for All is a different program.
Oh, okay.
Backed by CalHFA. Okay, and that's been a hot topic in the media. The thing is, CalHFA is around year round. You can get a CalHFA loan that can give you the 3.5%. January 1.
So there's a difference. So you got a CalHFA, just the basic.
The standard.
And then now the Dream program.
Dream program is a very little special program through CalHFA that is opened for a very limited time. That is based on a lottery system. That is equity appreciation. So a lot of people have been seeing this Dream for All program and super excited. I'm going to, thank you to the media. They see things in the media saying, oh my gosh, you can get up to, $150,000 to purchase a home. Well, you could. So first you have to get qualified by us, a mortgage bank, who then would submit your loan to them based if you check all the boxes, right? Mm-hmm. You submit the package up to CalHFA directly, because again, it goes to them as the lender. And then for the Dream program, it's a window of opportunity currently open, but for a limited time. You go in with all of the other buyers throughout California who fit the mold. And yes, you're put into a lottery system with the hope that you're one of the lucky few that get a voucher saying, yes, you've been approved for up to 20% or $150,000 of the price of the home, and you now have 60 days to get into contract on a property. So Dream for All is a program backed by CalHFA that is of course causing a lot of excitement and getting a lot of phone calls from it. But again, it's a separate program through CalHFA that is very, I tell buyers all the time, it's so limited. So don't get your heart set if you don't happen to either meet the requirements of it or don't get picked out of the lottery system. Thankfully, we have other alternative financing.
Exactly. So I think a lot of people don't know that. They see the dream program. They're like, oh my gosh, this is great. But then they don't, get it picked. But at least CalHFA has other program that they can help them out with, which, like I said, not probably a lot of people know about that.
And then that takes us to the next topic, Julian.
Oh, yeah. So if you don't have that option, say you don't meet the check boxes on those programs,
right? Now
you have a second option or third. We'll call it the third option.
Well, it's the second because CalHFA is the first. It's been around for years and years. It's backed by the state of California. Then we have, and then the Dream for All is a little like niche program that comes out at the beginning. It's happened the last, I think, 4 or 5 years. Don't count me on it, but it starts at they talk about it, they get excited, and they offer it for a very limited time. So this is your limited time option CalHFA program, and it gets, people interested, and that's what helps, get phone calls about applications come in because people are like, oh, I'm going to do the Dream for All. So it's a way to get the conversation going. But like you said, if you don't meet the boxes for just CalHFA itself, the standard CalHFA, or you don't, get into this Dream for All program, what else do we have? And thankfully, we have options.
Our in-house program.
Yes. What is our in-house program?
The Movement Boost program.
And what do you know about the Movement Boost program?
Well, it's a variety of options. You can go, 3.5% down or the 5% down assistance. It's also the same thing as a CalHFA. It's a second lien.
Okay.
But it's not deferred, right?
It's not.
You have to pay that lien.
Yes. So that, very good. Good little summary there, Julian. So yes, we have our own in-house down payment assistance, which is wonderful because if you don't meet those very specific requirements for CalHFA, we have our own in-house DAP, down payment assistance, that it follows the standard FHA guidelines. So fun fact for anyone out there, they're like, oh, I'm not a first-time home buyer. Oh, my credit's not 660. I make a lot of money actually. I have, but I don't have the down payment. This is the fun part about the boost, like the fun facts, because again, fun back and funding. So the Movement Boost, again, is our own in-house down payment assistance. We do not have income limits.
No.
Which is amazing. So if you're making, we don't have to worry.
It's all for year-round.
And it is a year-round program. Currently a year-round program.
Yeah. I don't think it's going to go away.
Well, as of today, based on what we're talking today, it is here and it's a wonderful option. So no income limits, which is amazing. Okay. Then we can go down to 600 credit scores. So you don't need to have that, mid 600. So if you're like, oh, I make good money, but my credit, I had something happen, so I'm at 600 or 620. Nice thing is that we can do low credit scores. We can have higher debt to income ratios. We pretty much just mirror the standard FHA guidelines. As long as we check all those boxes and we get an automated approval, with factoring in that second loan. So again, as you mentioned, you can get up to 3.5% or 5% of the sales price, and it's based off sales price. Okay. And if you factor in that payment with everything else and you meet the debt to income ratios and we get an automated approval, you're good to go. So I would say the one con is that you do have a second loan that you are paying on. But again, it is the trade-off. Like, hey, I pay $4,000 a month in rent, and I make good money, and I had life happens. How can I buy? I don't want to be throwing all this money away in rent anymore. And you're like, okay, well, thankfully we have an option with the Boost. Plus, you do not have to be a first-time home buyer.
Oh, that's great.
Yes, you could be a repeat buyer. It does so we're not going to if you said, well, I owned 3 or 4 years ago, so now I can't go to CalHFA because I'm owned a home. You could have owned a home. You could be selling your home and maybe you didn't get any money from it, and now you need assistance. You can qualify for the Boost.
That's amazing. Well, like I said, it's more flexibility, I think.
Lots of flexibility.
And I think that's important to people to understand. Just because you can't get this doesn't mean there's other options out there.
Right.
And those options can work for you for your, every scenario when you're trying to get, a loan to buy a house. It's always different.
Everyone's scenarios and situations are different. That's why we have the conversation. If you have questions, reach out to us, ask. We start the conversation. Let's explore your options, see what is the best fit for you. Because again, yes, we understand you do your research, but that's why you trust the professionals over here to run down and this is actually the best option for you. And this is going to help you achieve your dream. And that's why we're so fortunate to have such an amazing another
Amazing
financing option with our movement with our movement boost. I'm excited. I can't. I'm getting tongue tied over here.
Up.
I'm getting all So yeah, no. So again, reach out. Let's have a conversation. Let's explore what's the best option for you. Let's see if down payment assistance is the best option. Because that's the other thing too, is like you might have money set aside and you think, well, I still want assistance. Well, does that really meet your financial goals? Do you really want a second lien that you have to pay back if you do a CalHFA? Do you really want to pay a second loan of like $200+ a month for the boost? Like, if you have money available, how can is this really the best option for you? So that's where you talk to us so we can help bring you home.
No, and this part too, you can refinance it as well.
As soon as there's enough equity, then you would combine the first and the second and you refinance that into one loan. Yes.
So it's not a forever thing.
No, it's an opportunity and an option to help get you that money so you can achieve your dream of home ownership.
Exactly. So like I said, if it works for you, awesome.
Yes.
But at least it's a start for
it's
something.
A start. And then the goal is that we work together over time as rates improve and home and values increase. And we're like, yeah, let's combine your first and second loan into one loan and then eliminate that second loan that's being deferred, or let's eliminate that second payment and save you money on your monthly. So again, we are here to be your go-to home financing resource from the purchase to the refinance and throughout your life, the journey through life.
Well, like I said, it's not it's not about being the cheapest way to get into home ownership. As in my notes I see right here, it's all about positioning, long-term wealth strategy, equity growth, and financial freedom.
Yes, it is. All those things, Julian.
Okay, so hear that, everybody? Like I said, there's different options out there for down payment assistance. Don't be scared.
Don't be scared.
We
don't bite.
We don't bite. At the same time, though,
not hard.
It's about starting a conversation with us.
Just kidding.
So stay tuned. We have more episodes talking about different things out there in the mortgage industry. Guess all of it. So follow, like, subscribe. We'll see you next time. Cheers.
Hey, listeners. We hope you enjoyed this episode of the Wright Move Podcast. If you enjoyed today's episode, please consider subscribing to our YouTube channel, following us on social media, and listening on your favorite podcasting platforms. New episodes are dropping every week, so stay tuned, and thank you for your support.